lender Salt says it has raised over $64 million to resume operations less than 3 months after its planned sale fell through due to the implosion of FTX. Joining us now to discuss is Salt Lending CEO and Director Shawn Owen. Welcome, Shawn. So, Shawn, let's just get right to the point here. How did you manage to close this deal in this market? That's a pretty impressive raise. So, how did you do that?
Yeah, good morning. Good to be here with you. I think the particulars of it, really, the easiest way to describe it would be community-led, investors' internal base, and the people that are stakeholders of our platform who really just want to see this opportunity through and understand the value proposition of the business and in Bitcoin, and realize that FTX's failure was fraud and a bunch of other things, but it wasn't a failure in the technology, and it hasn't changed the thesis. So really, we're excited about 2023 as a growth opportunity, and in the wake of how terrible of a year it was in 2022, the only thing that makes sense is to push forward and take advantage of growth mode here.
Shawn, how much of a risk and worry is the SEC and regulators state regulators coming after crypto lenders? We've seen this time and time again, BlockFi, et cetera, obviously Celsius, things like that. And one could argue about specifics of their business models, individual business models. Nonetheless, it seems to be a common theme that they're going after crypto lenders. How worried are you that this will affect, and if not, end your business?
Yeah, I mean, I think the regulators have been upholding the rules the way they have been for a long time, and not much has changed there when it comes to lending. So I don't think there's anything to worry about there if you're following the rules at all. In fact, I think it makes sense why there's extra additional scrutiny right now, of course. And I don't think it's just them. I think everybody's cautious and wanting to verify a lot more and a bit more conservative in the wake of everything that's transpired. So I don't really see it as a risk at all.
So in November, there was an online investing platform, Bank to the Future, and they backed away from a planned acquisition of Salt Lending after your company informed customers that it would pause withdrawals and deposits on its platform due to unspecified exposure to FTX. Are you able to reveal what the exposure was and details around that?
Yeah, I mean, what I could say there is we were really excited about a merger agreement going through with the intention really focused on how to help victims in the Celsius situation at that point in time. We hadn't gotten to BlockFi or FTX. It was really just a focal point of Celsius, which for reference is a similar value proposition where, for the most part, people are looking to hold onto their crypto for a long time and have utility on top of that at that point in time, specifically for lending. For Salt Lending's purposes, it's very much the same. And so we saw it as a huge opportunity. And unfortunately, with FTX at the end of a really bad year, it was just too much to take. And we said, we don't know what's next. I don't think that anybody really knew exactly how bad the contagion might be. And it felt like the only prudent thing to do was just to freeze and pause, which also included our proposed transaction at that point in time.
Was it because there were just too many withdrawals, not enough funds to fund it? What's the status of those deposits and withdrawals?
Yeah, no, we don't have the same model in that regard. So there isn't the ability to just have a bank account or deposit and then have an instant withdrawal. That's not really the model. Our model is really much for long-term holders, people who are borrowing against their property with the intention of a long period of time in a loan. So you would have to have a bank run in the form of a bank payoff. You'd have to go pay off all your debt quickly to have a bank run. So it's not comparable in that regard. But what is comparable is that FTX was a shock, and it was so fast and so surprising that so many people had been deceived and nobody really knew what was going on at that point in time, that it led to kind of a paranoia to think about what if all of the other exchanges have bank runs. There is this interconnected element of crypto in this industry, and it would be very hard to know exactly where that contagion would end. We saw Genesis after that. There was rumors about everybody you could possibly imagine. And, in a situation like that, it really just felt like there's no good answer besides protect your customers and start interacting with them directly rather than being outward facing, and assess the risk before you do anything.
So what is the status of the deposits and withdrawals now?
Yeah, so the status is we still have all of the same customers. We're working with them individually. I'm personally reaching out and meeting every one of them that I can. I've gotten through a couple hundred now, and continue to keep building those relationships. It's technology, but we see technology as a partnership between people and code and what needs to happen here in these businesses. So there's a human relationship behind every one of these. There's a conversation that happens. It's not just a platform when you deposit. There's a whole bunch of steps that go involved with that. So we're just working to instill confidence, and honestly, that's probably why we're having a very good level of success right now. Is that our base of stakeholders wants to thrive and doesn't want to disappear or give up on crypto, or they don't want to just go self-custody or any of those things. They need the services to exist.
And what do you see as the future of crypto lending now that there is that paranoia, as you say, in the markets, and we've seen all these crypto lenders go bust?
Yeah, I think the table stakes are a bit higher now. I think there's going to need to be a greater degree of transparency, proof of reserves. I think solvency and surpluses of capital, making up the ability for people to be much more informed when they're going into these conversations with lenders, and also inclusive of DeFi. There's a bridge still to get to that. Some people are exploring that further. So there's probably a continuation of the technology that can help facilitate this. But I just really think that the bar has been set higher now. There'll be more scrutiny, and I think that's a good thing.
All right, Shawn. Well, congratulations on the raise, and thanks for joining us. That was Salt Lending CEO and Director, Shawn Owen.